If you want to make improvements to your trading, then it's really important to be intentional with your development. It's very easy and very common for traders to actually get stuck at the level that they're at and never progress into profitability. There's a little secret in trading that a lot of newer traders don't necessarily understand, and that's that most of the work to improve is actually done when the market is closed. So initially, that means all of the learning and the reading and the understanding. But once that initial part's been done, a lot of the work is actually done in the pre market prep and also the post market analysis. And spending time on these will really help to push you forward in your journey. So, in this video, I'm going to talk you through some of the pre and post market work that you can do to help progress you as a trader. If you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well.
So I trade the US indices in the New York session, and the New York session opens at 2:30 UK time, which means I start doing my pre-market prep at 2 o'clock. That gives me half an hour. The very first thing at the very top of the check and at the top of my trading plan is to establish whether today is a day which should be traded at all. Now, if you think about it like this, remember the times when it was so easy to place a trade. It felt like it was effortless and it went straight into profit and you made a big win. And then think about perhaps the next day or another day when you tried to replicate that, but the market was chopping around and it didn't matter whether you were buying or selling or what direction you were going in, you were getting stopped out and there was no way you could have got anything out of it. So it's very common to have a mix of good days, easy days, and bad days. And the mistake that a lot of traders make is that they try too hard on the days that are bad and don't strategically eliminate them. So the very first thing I do is try to strategically eliminate the bad days by establishing if today is even a day I should be trading. So things I look for are, if the market made an unexpectedly really big move the previous day, then often the next day is very choppy and difficult to trade. So I'll completely eliminate that day. Other days which are worth eliminating are 2 days before big news events like CPI, NFP, and interest rates decisions. So that's both days before. So NFP the Wednesday and the Thursday before, and CPI and interest rates decisions 2 days before. That's because the market is the most indecisive whilst it's waiting for big news. So it's unlikely to make a big decisive move on those days. You can also check yourself and see if you're in a mood that is okay to trade. So for example, a lot of traders have reported that when they're feeling angry, tired, or stressed out or upset about something else, that they don't actually trade that well because perhaps they're chasing a win to try to make themselves feel better. So give yourself a little check. Have you slept? Are you okay? Do you feel happy? Are you focused? Are you okay to trade? The next thing I want to do in my pre-market check is to think about timing. So controversial, but I believe that timing is more important than direction. Reason for that is with direction, you've only got 2 options. You've got buy and you've got sell. So it's pretty obvious if you've got it wrong. But with timing, the session is long and the moves can often be very quick. So say in a 6.5 hour long session, say there's just one tradable move. That might just happen in a 10-minute or half an hour period. So you're waiting and doing nothing for a really long time and trying to get that exact moment where it does that move. Imagine now that you knew the exact time the market was going to make its big move at. That would make your job so much easier, because think of all the times when you've placed trade after trade after trade and made losses trying to get into a market which wasn't really moving, and then it did make its nice big move, but by that point you were already burnt out from all of the losses you made when it wasn't really moving nicely. If you just knew the exact time, it would make things so much easier. So obviously we can't know exactly what time the market's going to make its big move at, but we do get clues before the market opens. So in the pre-market check, I always want to be looking for those clues. So one good clue is looking at the previous session. So if London has made a big move, so that's around 200 points in a nice trend in the London session, often that means that the open of New York is very difficult. So I would usually expect that the nice big move might happen a little bit later. Sometimes it's after 3 p.m. UK time, which is 10 p.m. Eastern time. And sometimes it's even later than that if there's been a nice trend in London. Another check that you want to do is the economical calendar. So you want to see what high impact news is scheduled for the day ahead. And you want to expect the big move to happen after the last piece of high impact news. So this is going to vary each day. Some days it all comes out before the market's even open, so that's going to affect your decision. You may get a move closer to the open on those days if the news was quite decisive and it aligns with other factors on your directional bias check. But for example, if there's news spread out throughout the session, so sometimes you might get news coming out at 1:30 UK time, 2:45, and then 3 o'clock, you would want to wait until after 3 to make any trading decisions. So you're always looking at the high impact news and the last piece of high impact news. You also want to do a Google search for any factors which may affect the markets that you're trading. So as I trade the US indices, anything that Donald Trump does highly affects the market. So I'll always do a Google search for Trump, and I'll just go to the second tab in, which says news, and I'll see what's happening in the news today. You'll often get ones which are lagging. So this one says 9 hours ago, and there'll be some which are 19 hours ago. So you want to look for the most recent ones, the ones that only happened a few minutes ago or within the last couple of hours. This will give you clues as to what to expect throughout the session. So for example, if Donald Trump is in a meeting, then I might expect that the market might be slightly still until he comes out of that meeting. So you would expect conditions to be difficult, and you would be waiting for any news to drop that he's come out or any decisions being made. Another search that I like to do is the Fed, just to see what they're up to and if there's anything important that I should be aware of. Also on my pre-market check, I like to look at price action. I'm usually looking at this on the 1-day chart. I'm always looking on the 1-day chart before I look on the 1-minute chart, just so I get to see the big picture of what's going on. So you can see any long-term trends really clearly. You can also see if you've perhaps broken out of a recent all-time high, or if you're having a pullback on the day chart. So I love to see what's going on in the day chart. I also like to check for momentum. So I use Heikin Ashi, which shows me whether we've got bullish momentum, bearish momentum, or if it's indecisive. If it's indecisive, I'm more likely to sit out. You always want to be looking for more certainty when you're placing a trade rather than uncertainty. I also spend the time when I'm doing my pre-market checks to draw on key levels. So there are thousands of key levels for the US indices. So I won't go into all of them. That's another video for another time. But that's something that I will do in my checks. I'll make sure the key levels are on, and that helps me to plan for the day ahead. And another thing that I always do before the market is open is I actually try and talk myself out of trading. So it's quite easy to come into a trading day with a lot of optimism, especially if you had a good day the day before. So what I'll always do is I'll always try and tell myself the reasons why it might be difficult and almost talk myself out of it. This means that I go into the session extra careful and I'm prepared for situations to be difficult. I also find that I often make the most mistakes towards the beginning of the session. So I'm always trying to remind myself to wait and to hold off. So I do little mantras and say little affirmations to myself, and this helps to remind me to be careful and to stay focused and not to place any impulse trades. So I know a lot of other traders do affirmations and little statements before they start the trading day. I know a lot of traders also like to do a meditation. So anything which kind of keeps you grounded and helps you to stay focused on the process of trading well rather than making money is really beneficial. Once the trading day is over, I always do a bit of a cool down. So I always leave some energy to do a post-market analysis. I will look at every single one of my trades and I will analyze them. So first of all, this really helped me to overcome overtrading. In the beginning years, I was overtrading a lot, but when I had to do a post-market analysis and I had to leave a bit of energy to go over every single trade, If I had too many trades, it was just really overwhelming and quite a harrowing experience. So that helps to actually prevent you from over trading if you know you have to look at every single trade in detail at the end of the day. And for every single trade, I will ask myself three questions. What did I do wrong? What did I do right? And how can I be better next time? This really, really helps me to always improve as a trader. So even if I placed a winning trade and I'm happy with how I did, I will still ask myself, what did I do wrong? Could I have done any better on that? And that means that I am always improving. Another question that I like to ask myself in the post-market analysis is, did I miss any opportunities? So was there a big opportunity that I missed? And if so, how can I not miss it next time?
So now you understand about pre and post market work. If you want to implement this into your trading routine to help progress your trading, then I would say watch this video back from the beginning and make a note of all of the steps and see how you can incorporate them into your trading plan. I make use of alarm clocks, so that's a nice little tip, is that alarm clocks can help to remind you to do the work. So for example, I trade the US indices in the New York session and I'm in the UK, which means that New York opens at 2:30 p.m. UK time. So at 2 o'clock, I've got a trade prep alarm. So that gives me half an hour before the markets open to go through and do my trade prep and make sure that I'm organized before the market is open. I also have an alarm clock once the market's closed or as it's nearing to close. And that reminds me to do my trade analysis and my post market work. So, setting those alarms at the beginning of the day means that I never miss them and I never forget. Hope you found this helpful. If you did, give it a little thumbs up. And if you want to see more content like this, make sure to subscribe to Think Markets now as well.